I always feel advisory is the fundamental or the stepping stone for anybody who's investing in the market or for the asset management industry as a whole. So the primary difference between a PMS and an advisory would be the quantum of investment, the minimum capital required to start. A PMS technically requires 50 lakh. Advisory could start with anything. You could be investing 500 rupees, 1,000 or more. So that opens up a whole new market. So retail investors were just getting to understand the market, and they may not have the time or interest or the the expertise to do their own research. An advisor is what saves the day for them, basically. So I think that's a very critical aspect of the market and very often overlooked.
Hello and welcome to Market Pillars Uncovered. This is the series where we get you powerful insights from India's leaders who are shaping the financial ecosystem. Our guest today is Sankarsh Chanda. He's the founder and CEO of Savart, which is a next-generation investment advisory firm that's actually backed and powered by artificial intelligence or AI. In today's discussion, we will be talking about how investment advisory as a service is evolving and what's the outlook for the Indian economy, but this outlook is definitely data-backed. Thanks so much, Sankarsh, for joining us today.
Absolutely. Thanks for having me here.
Well, I think before I delve into a little bit about the service you're offering and the platform, I think let's just get a broad-based view on investment advisory as a service. Yes. How is it different from, let's say, a portfolio management service or any other wealth management or advisory service?
Yes. I mean, it's a very less talked about topic, but I always feel advisory is the fundamental or the stepping stone for anybody who's investing in the market or for the asset management industry as a whole. So the primary difference between a PMS and an advisory would be the quantum of investment, the minimum capital required to start. A PMS technically requires 50 lakh. Advisory could start with anything. You could be investing 500 rupees, 1,000 or more. So that opens up a whole new market. So retail investors were just getting to understand the market, and they may not have the time or interest or the the expertise to do their own research. An advisor is what saves the day for them, basically. So I think that's a very critical aspect of the market and very often overlooked.
Yeah.
So this, whether you look at the number of advisors in the market, whether you look at the depth of that market, there's a lot of potential to grow.
So I'm glad you mentioned that literally even from 500 rupees onwards, you can actually go to an advisor. So there's an often spoken statement that, I've just started my job, I'm barely getting the starter salary right now, I don't need to go to an advisory. Do you think those are the guys who actually need advisory the most?
Yes, absolutely. So, I mean, like I said, those three factors, either time, effort or expertise. If you lack any of these, then you should be looking for an advisor, irrespective of the quantum of investment. And earlier, people had an excuse, right? That advisors are expensive. If I'm investing 50,000, what would I pay you as an advisor? I mean, there's nothing left to pay. Today with AI, and not just Savart as a concept, right? When there's an option to hyper personalize advice at a scale and also keep the costs low, that's actually a possibility right now. It's not speculation. So the costs have come down. The services are much more customized. It's possible now to take an advisory service even for a small cap.
Yeah. Okay. And that's a great segue into actually Savart because I want to know how exactly is your company empowering investment advisory as a service through AI?
Yeah. So in fact, today when we speak about AI, I mean, we're often mistaken with the noise around everybody wants to talk AI today, right? So AI for us was not a choice, it was a necessity. So when we started in 2019 with our advisory services, after we received the SEBI license, the first thing we realized, and we already had the philosophy that we were working on, was that most fund managers generally do not know their job well, right? So they tend to underperform the markets over sustained periods of time. So there's a hero every 3 years and then they get close to zero, and then there's a lot of volatility. Now it's like saying 100 out of 100 or say maybe 98 out of 100 doctors are unable to perform successful surgeries. Then you start questioning the idea of surgery or maybe the idea of the profession, correct?
Field,
So the same thing is very often not asked about fund management. There's discussions on narratives, there's discussion on stories, but when it comes to performance, there's very few who kind of make the cut, basically. And that too with a very good consistency. As a customer, when I invest into a certain fund, I don't want to look back maybe for 5 years, 10 years, whatever that period is. Every 2-3 years, if there's that kind of volatility in the way things happen, then it's a problem. But we need to go to the root cause to understand why this happens, right? One is a rigidity in their investment approach.
Okay.
So we often like putting ourselves into buckets. I'm a value investor, I'm a growth investor, I'm this kind, I'm that kind, I'm a small cap, I'm a micro cap guy, I'm a mega cap guy. Buckets are always dangerous. Some buckets do well sometimes. No bucket does well all the time, right? So when you make your strategy rigid and you're not ready to adapt what's happening in the market, then it's a problem, right? So that's number one. Number two, bias, inherent bias. Now say I'm looking at a toothpaste company. The same toothpaste whose products I've been using since childhood. And when I'm looking at an investment into the company, how unbiased do you think I'd be about that company? And this is all subconscious. So whether we talk about heuristics, biases, they're inherent to the human nature. So where research starts and where bias ends, you absolutely do not have an idea. So these are subconscious things that actually mess with the accuracy of research of a human being, basically. Third is the speed. With more and more companies getting into IPOs or listing themselves and the number of opportunities increasing, asset classes increasing, it gets even more complicated by the day to actually make an investment decision. So there is a freeze in terms of a decision, right? So where do you want to put money? So all these things we thought, why don't we change the way things work, right? So why don't we automate this entire process? So from discovery of a security until exit, we wanted to automate the entire process. Now the quantitative part was done before, right? So there are quant-based hedge funds, nothing new, purely mathematical, doing technical analysis and decisions. But we wanted to be a fundamental long-term investor. That's where inherently our focus and interests lie. So we had to include the qualitative analysis aspect, qualitative research. Now I ask you, what's the corporate governance of a certain company? You can tell me 6 out of 10. It's not numerical. So we had to work on systems that could understand text, that could understand visuals. And that's how we segued into AI as a concept, right? So it was an enabler for us. We never wanted to be a AI-powered company. AI became a solution to what we were looking for. And that's how we automated using our Apart AI systems, basically. So in summary, we use our Apart AI to do quantitative, qualitative research and then create customized portfolios for retail investors. So whether you're investing 50,000, whether you're investing 5 lakh or maybe 50 crores with us, we have the entire spectrum of clients. The portfolio reflects who you are and what you need. So if you were a multi-millionaire and you had a, say, $20 million portfolio, the kind of bespoke advice that you get, that's what we have democratized to the retail investors. So if you are different, very likely your portfolio will be different.
Of course.
Right? So that's what we have been able to achieve.
All right. Okay, very interesting. So you're absolutely right that quant always, was a part of our investment, universe. But yeah, the qualitative aspects is something that needed that human intelligence. But by bringing AI in, have you, in a way, completely eliminated the need for human intelligence when it comes to investment advisory? Because let's face it, when it comes to especially the qualitative part, that's when human biases are most visible. So have you completely eliminated that?
Yes. So at least with our internal systems, we have thoroughly eliminated. So there's absolutely no human interference from the step 1 to the last step, basically. There's nothing. So the human touch is with respect to our customer service or support or those things. So those things still need the human touch, because at the end of the day, our money decisions are very personal. Right? We want to talk to a human, not to a bot. Most of the times, at least. So, but research, we have thoroughly eliminated. In fact, our PMS fund that we have introduced is also thoroughly automated. It's a fully autonomous fund.
I know, I mean, I'm probably asking you to put your foot in your mouth over here, but you've been working on Savart for the last, now it's been what, 6 to 7 odd years. Have you seen anywhere where perhaps that human intelligence or that emotional connect was required, where AI could not really work a problem out? Or
absolutely. So there's at least the emotion part, I can agree more. Maybe the intelligence part system is by far better than the average investor or the average fund manager. Now, when I just spoke about fund managers, there's a few extraordinary guys, right? I'm not comparing with them. They are extraordinary indeed. But the benchmark of an average human fund manager is so low that we crossed that one and a half year into the system, basically.
Okay.
It was that simple. Now the problem was optimizing above and beyond that. How do we keep increasing the alpha? How do we sustain alpha? That's where the problem was.
Okay.
But and there is a clear system superiority over humans in that part. But on the emotional front, where there are certain subtle aspects that the client is not able to communicate, right? They have certain very idiosyncratic requirements or very personal situations in the family which need a different kind of monitoring and allocation of capital.
Right.
That's where the system misses, basically, those personal aspects.
Okay.
And that's exactly what we're working on now. So we built a psychometric analysis risk profiling system called EFG. Emotional, financial, and general analysis.
Okay.
So that's a proprietary system we built, because if say you are a potential customer, and then I ask you a simple question, what risk can you take? Like, how much risk can you take? It sounds like a simple question, and you'd give me a simple answer very likely, no, I'm good with risk, I'm young and I want to take risk, it's okay.
Yeah.
But then when the markets fall by 20%, your behavior may or may not be in line with what you say.
Correct.
So what you think you need and what you actually are saying could be very different.
True.
And many times you don't know the answer, and that's why you came here. It's like you went to a doctor and the doctor asked you, do you think you're healthy? Right? You can give a broad answer, but not a very specific answer. You went there because you think there's something that can be improved, right? Something that can be done better. So these aspects, the humans, I think, can do still better than AI at this point of time, but it's just a matter of time before the system kind of catches up, even on that front.
Yeah. All right, I have no doubt about that for sure. I mean, if AI can read corporate governance reports, then why not?
Absolutely.
Okay. How has it been for you at Savart? I mean, how have you seen your client base grow, perhaps your AUM as well grow? Yeah. If you could share some milestones, because I really want to know how people are actually absorbing AI in their own lives. I mean, if you're letting AI, handle your money, it really speaks a lot about investor behavior as well.
Absolutely. So, I mean, we're very close to nearing $1 billion in assets at this point of time, which makes us unofficially one of the largest advisors out there.
Wow.
But the very unique thing that I wanted to share is when you said how people are embracing AI, right? I actually wouldn't conclude from the growth in our AUA, our assets under advice, as an embracing of AI, because most of our clients, very surprisingly, still don't come for the AI. They come because they were referred by some other person in their family or friends. They're like, just take it.
Yeah.
Right?
Yeah.
So it's that, like I said, that emotional connect, right?
Yeah.
So they really don't care about what AI we are using. We are very obsessed about it. That we need to perform well, we need to give this. What matters to them is completely different things.
At the end of the day, it was still word of mouth.
It was word of mouth, right? Or they read somewhere about us and then they were like, I'm convinced this is the right thing to do.
I see.
So that's their major decision maker. And then 2-3 years into the service, they say we retain them for 2-3 years in a row. That's when they actually start understanding, oh, I really thought Sankarsh was giving the advice. I really thought somebody else was putting the advice from behind, right?
Okay.
So then when they realize, then that's when the stickiness increases.
Okay.
Oh, okay, now I've seen it, I've used it. Seems like it's a good thing to do, and then let me stick around for a few more years. That's what happens. So that's the cycle that we have seen. What we initially expected was, look, we are AI, we are cutting edge, that's why people would come. That's not what happened.
Yeah. So are you planning to pivot with the way you're attracting, you're attracting clients?
So we're good at the work we do, but we're really bad at how we market ourselves. So I think there's a lot of fundamental aspects that I'm still fixing before I even think of pivoting, right?
Yeah.
And I think it's good to stay close to our roots because that's what we love to do. Clients might love us for a different reason, but then as long as these are interconnected in some way, I'm fine with that. Right? Because there's just two things that motivate our advisory services. Even when we started, we were flowing against the current, right? So out of every 100 people who sign up with us or who come into market, everybody wants technical analysis, they want trading advice, they want to get rich quick. We're going against the current, we're telling them, no, be slow, be patient, 3 years minimum, fundamental investment. Second, you're trying to sell a subscription service to a retail customer. Now, I don't need to explain how difficult that is, right? Third is the retention. However much you educate a client saying 3 years, 5 years, they want to evaluate you every 6 months, every 3 months. And then some tipster on Telegram giving a multi-bagger advice, something works by luck or by coincidence. And then you start comparing and then it gets difficult to explain, right? To educate and have them retained. So we went against the current just because that was a passion point for us, right? When a retail investor comes to me or to the company, and we create a 40% profit, 20%, whatever that is, it makes a significant change in their lifestyle and in their life. So that adrenaline rush that we get, that was the reason why we chose this segment. Otherwise, you see, the segment has been a graveyard for a lot of other companies. Everybody wants to do advisory. Nobody has been able to scale. So that's one reason. And second, for anybody who wants to do PMS, AIF or anything else, this is a starting point for them to build trust with us. Right? They want to start small. Nobody wants to give us a 50 lakh check to start with. So that's how it kind of grew.
So I think the one thing that you've really been able to crack the code with, especially with the use of technology, is this hyper-personalization at scale and democratization as well. So tell me then, what's the vision? You've already hit $1 billion roughly, like you said, in AUM. What are you targeting? Any vision that you have in terms of AUM?
Yes. So I would say, firstly, my vision is from AUA to AUM. I want to get from AUA to AUM. So I'm a clinic at the moment. Right? I want to be a hospital, a super specialty hospital. So why I keep taking doctor analogies is because I was just having that conversation with somebody else. So it's stuck in my mind. So we want to grow that way. And we have our advisory today. We have our PMS. Next is AIF for us. We're soon going to apply for that, and eventually to a mutual fund. So from the start, to almost all products in the asset management space. And on the infra side, we're looking to, we're exploring purchasing a broker, an RTA as well. So the idea is 10 years down the line, from education until kind of exchange maybe one day. We want to have the entire ecosystem. So how Apple owns it, software, hardware, and whatever. Right? The entire ecosystem. That's where we're going. That's where we're headed.
I'm loving the analogies, so please keep them coming. Okay, very interesting, and thanks so much for giving us this amazing introduction into investment advisory. I mean, we know that everyone keeps talking about AI perhaps replacing financial advisors, so on and so forth. And I think you guys are a live example of leveraging AI in the right way, but also knowing exactly where to keep that human interface, because you're very true in saying that sometimes you want to pick up the phone and just speak to a person, especially when the markets are seeing, you know, a tumultuous fall or something like that. All right, now you have this extensive research infrastructure, you have a plethora of data at your disposal. So I cannot help but ask you, what do you think is the way forward for the Indian economy, for the markets? What are the numbers telling you? Any trends that you have been able to spot?
So honestly, whatever we spot is in hindsight, because we don't control our portfolio. So I could be telling you that, look, I have 40% small cap in my portfolio at the moment in this particular sector. Tomorrow I could be gravely wrong and things change with my portfolio. So we are, so whatever we spot is in hindsight, right? So number one, like we have kind of stuck to very concentrated portfolios over the last 6 years. We have had very little churn in our portfolios. Our portfolios have also been tilted towards slightly on the aerospace, defense side, and not aerospace because I also own an aerospace company, but that's a trend that I've noticed particularly. Less of banks, right? A little more of tech. That's the mix that we are continuing to see with respect to what is in our portfolio. And with respect to market caps, the allocation is more or less very balanced. Large, mid, small, micro. It's almost thoroughly distributed in terms of that. Second, in terms of India as an economy, right? We have US and Canada as part of our advisory portfolios. We invest into those markets as well. So India is by far the largest bet. Partly because our systems have been initially trained on the Indian markets, and second because it's an opportunity that is second to none, right? So I always tell people there's no question that we're going to grow. The only question is how much, right? And how fast. So it's a no-brainer in my opinion that these things are going to be, I mean, the economy is going to do really well. And within that, not my company's opinion, but my personal opinion is defense and space, right? So that's going to be the next big frontier for the world and for India particularly. I think that's where things are going to be the most dynamic and evolving. But then again, I always put that flag, right? Things which move fast may not be the best money makers. So you could be right about an industry, but wrong about the money.
All right. Okay. So aerospace is something that you already dropped a hint about. Defense is the other one. I want to be a bit more greedy and ask you, because again, if you can give me like an AI-led data, reasoning, logic about any other industry that catches your attention, your company's attention?
Yes. So renewables is one more. So, and especially waste management and the circular economy kind of businesses, right? There are at least 2 or 3 in our portfolio at this point of time. And that's pretty huge given the size of an individual portfolio in the PMS, which is not a custom, which is a model portfolio. That's pretty high out of a very concentrated portfolio. So that's one more pattern that we have seen. And second, I could say, I think automotive space. It should be the 3rd or 4th most popular after the ones that I've mentioned. That's ancillary autos. Now, the other part of your question, like the reasoning, that's where things get tricky with AI, right? It's extremely difficult to actually pinpoint and give a rationale behind the decision we take. Now, the next question anybody would ask, that's pretty scary, that how would you not be able to explain something that you do? We can explain, but the difference is we don't want to make narratives, right? So, for example, how we look at the market is reason and consequence. The market is a complex adaptive system. You could be right about the reason and wrong in the consequence. You could be wrong about the reason and still be right about the consequence. You invested in an aviation company. You thought they were going to put an order for 500 planes, grow their market share and do something. But instead that company expanded into hotels, and that was a higher margin business, and they ended up growing really well, their top and bottom line, and you made money. Now, are you right or wrong? It's a tricky question. And that's exactly what happens with markets, and that's why we hate narratives. So we never give target prices, we never give stop losses, we don't explain what we do, we just explain the company, we explain the business, but we never make forward-looking statements, because our primary philosophy is to accept that we don't know much about the market, right? So there's a lot that we don't know. So any fund manager, any investment decision maker that you meet is bluffing for the most part, right? For the most part, because the number of factors that are involved are so high and so many that it's difficult for you to pinpoint and say this happened because of this, right?
But so then there was still, for example, when you said that you like defense, there is still something that you imagine would happen.
Yes.
And which is why the consequence is the defense is your bet?
Absolutely. So that's why I said that's my personal opinion. I'm in the same bucket.
All right, okay.
Not my system. Right? So we do give out a very detailed explanation, but those explanations never have rationales. So they say the company is looking to increase its manufacturing capacity, but will it actually have an impact on price? We don't know. But that's a thing to look out for.
I see. Okay.
So we don't make assumptions.
Right.
So we write about those reasons, and then even that is system generated. So you can create a report on, or
it's not like your average sell-side report, basically.
No, absolutely not.
Got it.
Not coloring facts with opinions. Never.
Interesting. Okay. Does it also, is this a factor to consider firstly? Because a lot of viewers do ask that, whether I should invest in large caps or mid caps or SMEs, like you said, buckets.
Yes.
Right?
Yes.
Does AI not see those buckets and it just simply looks at the more underlying factors as opposed to just like how big is the valuation of a company?
Perfect. I'll answer this question in a slightly different manner. So the AI does look at these buckets, of course, because the data is in input, right? So
fair.
There's many sources that keep talking about large mid cap, and it reads a lot of news. The system reads a lot of news. So there is news that talks about these things. So there's no way that it escapes that information. But if that particular factor or data had a bearing or an influence on share price appreciation or on wealth creation or on alpha, it would have been visible to us. There would have been a skew formed in our portfolio towards a certain market cap. So when I said it's thoroughly distributed, it means there is very little chance that it has a bearing on the share price appreciation. However, maybe our system needs more time or it needs more maturity, that I can't comment. But if it had an influence, it would have been visible. Based on the data so far, and 6 years is a good enough time to actually monitor a portfolio or a system. If it has not created that, it means it has very little bearing, basically, which also appeals to the common sense. You use the general human common sense. There's a good company in micro caps, there's a good company in mega caps, there's companies that have tripled at being at a $1 trillion valuation, companies that have not tripled being at a 10 crore valuation. So there's opportunity everywhere. So I think common sense and the data so far align, so far.
All right. Okay, well, I think the fact that you've understood how AI as well understands things is truly a testament to, the fact that you've completely understood how that ecosystem works and how you leverage it to the best of your capabilities and really fill in the gaps that are left behind by fund managers. I want to know, what was your founding story like? I mean, before Savart, just in our brief conversation, you mentioned that you've been involved in investing and dabbling in the market since you were 14. That's a very young age. So I just want to know, how did it all begin? What inspired you to take that step into markets and then eventually leading to Savart?
So again, that was pretty organic, never pre-planned, like I want to start a business or nothing like that. I love reading books.
Okay.
I came across Intelligent Investor as part of my other reads. I was like, this is pretty interesting. And space has always been my passion, right? So space research, cosmology, astrophysics. I parallelly had started understanding that space, anything that I do in space needs a lot of money, right? Anything. So I had two ways. One, I became an academic or maybe a scientist and then work on it. But that would be a very individual impact. I wanted to do something larger. So I said, maybe I should look at involving something business and space. So I assembled a team that's much smarter than me and then do something. Again, these are very incremental thoughts and learning. Right? It sounds very sorted in hindsight, but it was not. So that's when I discovered stock markets. And why it caught my attention is I'm still a very introverted. I look at the ways of avoiding human interactions as much as possible. So stock market was brilliant that way. I need laptop, internet and my brain. That's it. So that's how it started. And then second, I used to get bored with subjects pretty quickly, right? So I want to change. So stock markets were different because every day it's different. And then every day I felt dumber and dumber and dumber. I'm like, I don't know this, I don't know that, this was wrong, that was wrong. So it kept me hooked on. And that's what keeps me still hooked on, basically, because it keeps teaching that I don't know anything in the market. So that's why it stuck. And then stock market and space, two startups juggling together, and that's how slowly the progress happened, basically.
Okay, stock market and space, I mean, there could not be anything that's more square and circle that you've tried to join together, honestly. What do you think was the toughest challenge in those early days?
Team, right? Team, and I would say capital would be number 2, but team would be number 1. Somebody who understands what we're doing, right? And that time, you imagine it's difficult to explain to people why you are doing automation, what you're doing. Is it just another marketing gimmick? Is it just a forceful fit ki haan kuch naya karna hai to ye we'll talk about this. Why are you doing it? And you don't have data to back it up. You can't show somebody data of a fundamental, fully autonomous system doing better than a human being. It's just theoretical speculation at that point of time. So to get the team aligned into that vision took me a lot of time, and to find the right people.
And then getting the first client, how did that happen? That to believe in this, what you mentioned, theoretical.
Again, that happened not because of AI. It was because that first client, they actually watched me work in the incubator. Like they saw me working on something. They came out of curiosity, asked, and they were my friends, family, extended relatives basically. And they told some other people, and then the first few dozen clients came, and then that's how it happened. Again, nothing related to our work. It's just connected.
So if today somebody wanted to become an entrepreneur in the field of finance, it's, I mean, the integration of AI technology, etc., it's inevitable. And I mean, most entrepreneurs pay this lip service, to AI and all of that, but very few actually implement it the way you do. What would you advise these entrepreneurs?
I mean, very broad generic advice would be, this is one of the best times to kind of, or maybe the easiest time relatively to kind of start up, right? So, or to be an entrepreneur. It's still not easy, but it's relatively to what it has ever been. I think starting out is more important than actually being right or trying to go for the precise product. I've always been focused on, like, I want to perfect this. I think the better thing is to just go to the market, let the market humble you, let the market give you feedback, and then keep evolving that way, right? So that's what I'd recommend. But I know that's a very broad advice, but that kind of applies to a lot of things. That
I think sometimes when you strive for perfection, we're actually just looking for excuses also to get out there and just do it, because there's this thing, right? Done is better than perfect. So
absolutely.
I think that's very sane advice, honestly. So I know you love reading. I know you love space. What are the other things you do? When you're not thinking about Savart?
So I travel a lot. I love traveling, exploring new places. I mean, if I'm exploring space, then I need to explore Earth first. That's a requirement. So I travel quite a bit. And then, design, art and architecture, that's been my another passion, basically. So I could stare at some beautiful buildings for a really long time. just soak in the beauty, write my notes on it, journals, and
that's interesting. Any buildings that we should be staring at that's got your attention?
They're not famous buildings.
No,
so
of course.
Especially whenever I come to Mumbai, right? I look at those old colonial era buildings, and there's those colonies where, So the South Bombay part. Of course, there's many other parts which I don't know. I'm not very well educated on the Mumbai geography, but those buildings are so well thought out, right? So the way the windows are shaped, the way they are placed, the way they thought about ventilation, how they kind of there's different perspectives in that. Sometimes the building makes you feel small, sometimes the building makes you feel bigger, and then welcomes you in. How do you just play with something that is non-living and make it feel, right? Make it interactive. That's beauty.
I 100% agree.
Yes.
All right, well, Sankarsh, this was such an interesting conversation, and I think I've taken away so many learnings really on how AI plays a role, and more importantly, what exactly you're doing to not just make it lip service, but actually integrate it in our journey with investments as well. So thank you very much for joining us, and all the very best with Savart.
Thank you so much. Thanks for having me here.
Well, that brings us to the end of yet another episode of Market Pillars Uncovered. Thank you so much for watching. We'll be back with yet another one.